Good on you,
Right,
man.
you.
How's it, Dave?
How's it, Dan? What's up?
Good,
You
good.
guys are at South Africa again, I see.
Yeah, good guess. We thought we'd come here to change the scenery. And I just said, as we went live, I said, Dan, you could have made me a coffee.
Yeah.
Too late.
Yeah, it's too
I'm
noisy now.
kind of expert now, Dave. Jeez, there's this complicated machine no one can figure out, but yours truly.
It's amazing how we've used that boardroom 1,000 times. You guys still haven't figured out the coffee machine.
Well, geez, I just leave it alone now, eh?
You turn it on, you push a button, guys. It's
Since this
I
guy.
wish it was that easy.
Yeah.
So anyway, how's
Technology.
Cape Town, Dave? Have you got good weather?
Today's not looking too bad. It was a hectic weekend. There was a point where I couldn't see across the street. The weather got really bad yesterday, but yeah, well, it's good. It was a good weekend to do nothing. Sit at home.
Oh, nice, man. Nice and chill, eh?
Did you watch the rugby then?
Yeah. No.
Oh, you should have watched the rugby. We killed Australia. It must have been one of the best games. Eh?
That was a beautiful game.
Oh, no, it was good, eh? In fact, as I put Facebook on, check, it's a PP. It's when they got into a big fight.
I reckon you guys should have a pre-show for rugby.
I think next time, just send Dave the link.
Yeah. No worries, Dave. Don't worry, man. I'm here for you, brother.
So anyways, I can see a few people are joining. If you have just joined us, this is Andrew, Daniel, Dave's Coffee Chat. Every Monday we go live at 1 o'clock where we talk all about property. We have guest speakers, and today we've got Miguel Martins, who is a full-time property investor, used to work at Absa Bank, so we will be bringing Miguel on in a few minutes to talk about his experience as a property investor, as well as where he thinks interest rates are going. So if you have any questions around Miguel's journey or interest rates, please just let us know. There's a comments box. We will let you know what events are coming up in the next 2 weeks. And yeah, man, if you have any questions on property, let us know right now where you are in the country. Are you in Joburg or Bloem or Cape Town or Durbs? And let us know what you're investing in. Are you looking for student accommodation, buy-to-lets or flips? Let us know what you're buying and where you're buying. So yeah, let's just see. I've got us here on Facebook. Let's see who's with us. Cool, quite a few people. Let me cancel the call. Cool, Dave. Who do you see online with us?
No one. No one said anything yet. They're quiet. It's a little bit shy for them.
Say hello to us. Let's see. I can see Daniel's watching us. There we go. So I think, Dave, maybe start off with what's happening this week, eh?
Yeah, 100%. We can dive into our events. It's always going to be good. Andrew, you're hosting a breakfast on Wednesday. What's your plan there? Who's invited, and where's it going to be?
Yeah. So Dave, we had the show last weekend at a private property. So I'm doing a little networking event on Wednesday morning in Morningside. And it's basically for anybody that's interested in the property industry, Dave. So obviously it's limited because it's breakfast. It's a little nursery, so about 15 or 20 of us will be going. And it's going to be for both people wanting to get started in property as well as people in property. So guys like Miguel Martins are joining us. Got a few Lions players coming in, some very experienced investors coming in. It's just a casual networking event, nothing major. But if you want to join us and come network with us, if you are a current member or you're new to us, it doesn't matter. Just email support. So Dan, if you put the support email address in, we can send you guys more information. So that's this Wednesday morning.
100%. I'm also just sharing a link over here.
Awesome. Why are you doing that? Linda Kula is joining us from Durban. Good to see you. Tandeka, you're in Lone Hill. And tell us, what are you looking to invest in? Are you looking for blocks of flats, buy-to-lets, flips? Let us know what you're doing. If you have any problems or you're stuck or you have any questions, now's the time to ask. Marisha Robus from Gauteng Property Inspections has just come back from Midstream. You're in Joburg. That's awesome, Marisha. One of our partners at Sept. Okay, so that's Wednesday morning, Dave. And it's a quiet month, eh?
Yeah, 100%. It's quite a couple of weeks. So that's Wednesday morning. That's this week. And then looking a little further afield, we got next week. We got the Money Summit happening up in Joburg. Drew, I know lots happening around that. One of which, if people want to get their tickets, they can just drop an email to support@sapropertynetwork.com, and I'll put a link over here for you. You can register on moneysummit.co.za with this coupon code, with the invite code SAPPN. Right there. So Drew, what else is happening around that? What's the deal? Who needs to be there?
Yeah, so Money Summit, we will be at the Money Summit next week, Thursday the 15th. We'll be there. So we've got a stand there from 9 o'clock until 5 o'clock. And then we're actually running a Sept and networking event in the evening from 6 p.m. to 8 p.m. It's free and it's open to all of our Sept members. It doesn't matter if you're a pro member or a foundation member. Make sure you make your way to the summit next week, Thursday on the 15th. You just got to go to the moneysummit.co.za and use the word SAPPN as invite code, and it won't cost you anything. It's a massive event. David's happening the whole of next week, I believe. And SAPPN will be there on the property stand on Thursday the 15th. So if you can't get there during the day, get there in the evening or vice versa. Just make sure you do come down and you say hi. We will be running a Sept and networking event at no cost for you guys on Thursday night, the 15th.
Awesome. That's exciting. So that's up in Joburg. And then for the Capetonians who are on the call, hope there are a couple of you here. I'll be hosting a breakfast on the 17th in Pinelands. So you guys can go and grab your links. I've at the link at the grab your tickets at the link I shared in the chat box. Going to be a really easy networking event. The idea is to just start spending more time together, build your relationships, network with each other. We've got a couple of guests confirmed. We've got Darren Francis coming in. We've got Christian Harbeck coming in. I'll be there. John and Akashni will be hosting and running the event with us. So it's going to be really exciting and good to just, rub shoulders, meet some people, and build those relationships. That's really what it's about. So that's the 17th. It's going to be in Pinelands in Cape Town. All the ticket details are in the chat box below.
Awesome, thanks. That's super exciting for the Capetonians. I'm sure the Durbanites are wondering when we're going there. We will be letting you know when we'll be in Durban. Don't worry. How's it going? Good to see you there in Pretoria. Cool, quite a few people joining. But Dave, should we bring on Miguel, our guest speaker for today?
Yeah, I think let's bring Miguel on.
Awesome.
Yes. How's Mix?
Good afternoon, Miguel.
Hi there, guys. How's everyone? Good to be here.
Very good, and you. Thank you for joining us today.
You can see I'm not wearing a red shirt today, or a red jersey.
Yeah, exactly. I was getting it's so cool to introduce Miguel Martins, a full-time property investor.
Different, eh?
As you guys may obviously, as you guys know, and maybe some of the Sept members may know, the guys I've chatted to, I just left APSA at the end of last month, and going out to practice what I preach. Been talking too much about it. Now I got to do it. But it's it's great to be out here. Interesting that it was strange this morning when I woke up and I didn't have 28 emails waiting for me just from this morning. but so great to be out here looking into some interesting projects in property, looking at a few things, and happy to chat more about that.
Yeah, definitely. So, Mix, how long were you at the bank for?
Sure, Andrew. Longer than I want to admit. So I started my articles as a young accountant at ABSA in 1998. So quite some time back. Took a couple of years to go to London and just go do the London thing. I think I like yourself did. Came back and then came back to ABSA. But ABSA is big enough that you can have actually quite a extensive career by moving around. But in home loans specifically, I was at home loans for the last 7 years.
Wow. Okay. No, brilliant. So it's been an awesome time for you, right? But like you said, it's time to move on now, and just do what you want to do.
I think there's a time for everything, and the last couple of years was great. I was able to marry my job with my passion. I was able to grow my portfolio whilst in ABSA, but also by learning from the likes of yourselves. On these chats, going to the Sept events, meeting with other members, and not just learning the content and skill side, but getting the inspiration by seeing what some great investors are doing out there. And I guess about a couple of months ago, started thinking that time to give it a go myself and look at rebalancing life and getting involved in some interesting things and things that are maybe more fulfilling for the next 5 to 10 years, I guess.
Yeah, definitely. And Miguel, when did you actually get involved in property? When did you buy your very first property, and why did you get into property?
Sure. No, it was about 20 years ago, a bit more than 20 years. 1998, I came across a book from Nedbank actually, and it spoke about all things money, investing in shares, investing in property, saving your money, or budgeting. Or it was one of those, or kind of all financial management books. And one of the chapters was about property, and that really kind of clicked something in me, and I got really interested. And just after that, I read Rich Dad Poor Dad, and I realized, hang on a second, this is something really interesting. It really touched something emotionally. It had some purpose linked to it, and I bought my first sectional title in Morningside in Sandton. I think I bought a 1-bedroom for just over 200,000 Rand at around that time, maybe 250, I can't remember. And held on to it for about 2 years, and then sold it after having had good tenants in. About a year and a half, 2 years later, sold it, made a massive 50,000 Rand. I wish I'd held on to that property now. That'd be good. Yeah, no, be good in the 1.5s, 1.8s, I think. But that was enough to get me started, and enough to really get to get me hooked. And then just after that, I bought a couple more sectional titles, started playing with areas and trying to understand how to not just find properties, but also how to find properties in areas that were attracting the right types of tenants. And that was my early journey, was really sectional titles and trying to figure that out. Of course, I wasn't making any money on those sectional titles. I was contributing a couple hundred a month. And it's because of that. At that time, other than a couple books to read, there was no YouTube, there was none of this, there was no Sandton. There's nowhere to get really that really good knowledge that we have available to us today. But it was enough to get me in. Didn't make any bad decisions, and that's exactly where I started.
Okay, fantastic. And where are you now? What are you investing in these days?
Sure. Well, I'm into multi-lets, so I sold off the sectional titles. They weren't sectional titles. Great to get started in. Actually, when a new investor comes to me and asks, where should I get started, and especially if they are tentative about property investing, I actually tend to suggest and recommend sectional title because they're relatively easy to manage. You don't find great deals, but you can get in, break even, possibly put a bit of cash in, but it's a great way to learn how to manage a property lightly, and also find tenants, manage tenants as well. But very quickly move on from that, and I'm into multi-lets. I've got a couple of properties around Joburg, northern suburbs, we manage them. I've got about 45 doors.
Yeah.
That I manage. Yeah. So, and I've got my team around me. I've got my property manager. I've got electrician and plumbers on speed dial. We've got gardening teams to manage to clean the properties, etc. And so obviously having left the bank, one of the questions I always get is of course you can rely on your rents. Unfortunately, I made some great decisions, some good decisions, and then some not so good decisions. So a couple of my properties aren't cash flowing positively, but they're in great asset areas, and some of the properties are cash flowing positively. So I'm in a position where I've got a portfolio that is positive, but not positive enough, which means that I'm not leaving my cushy corporate job and going into living off my rentals. I still got to get out there and hustle and find the next opportunity.
Yeah, definitely. And tell me, Megs, what's your view with flipping properties? Would you advise that? Are you flipping or not?
So I'm flipping my first property now. Flipping it's my second property. I did a property with some partners a few years ago, and I was the money, so I wasn't involved in the flip. But actually, the flip went badly, and I actually had to buy in the property. Others would have lost it altogether. So that was my first experience of flipping. So I was very tentative. But what I realized about flipping is that you've got to understand the full deal, the full cycle. Often investors go into these properties and they focus on the house, and they don't focus on the outbuildings, the garage or the garden, and they've got a budget. the budget that focuses on inside the house, maybe painting outside the house. But when a buyer comes in, they're buying the package, not just just a portion of it. So this current flip that I'm on at the moment, I'm doing it by myself. It's just went to market about a month and a half ago. We've got a buyer that's in process. We should know if they get their finance today or tomorrow. So all in all, it's been quite a successful flip. And it's actually, it was based on this flip that kind of got me to pull the trigger on going and becoming a full-time property professional, just because I was finally comfortable that I had enough skills to be able to do these kind of projects. So I'll let you know with a big thumbs up, Andrew, Daniel, and Dave, in the next 2 or 3 days when that finance comes through.
Let us know. That'll be awesome, man. So, geez, it's been quite a journey. So you have quite a few properties now, and is your goal just to go out and buy more properties and get more multi-lets, more flips under your belt, eh?
I think so. I'm actually taking a few weeks. Actually, after leaving, as I said, I was in corporate now for the last 17 years, if you count the time when I came back to South Africa. And I want to kind of get my head focused on what I need to do. It's very easy to get stuck in on the first opportunity that comes across my desk, and rather take a step back and look at what is my strategy. And what I'm realizing, to answer your question, is that I need to have a multiple of strategies and take on the opportunities that come up with those, but also understanding that when I put not just my money, but my time and effort in a strategy, I'm stuck in that strategy now for the next 8 to 12 months. So there's that commitment, and I want to make sure that when I take those opportunities. But yeah, I'll be looking at I'm looking at a flip already. No multi-lets at the moment, but always open to those. And I'm starting to dabble in or look into commercial. So a network in my network, I got someone who heads up one of the largest commercial property auction houses in the country, and he's invited me to go and spend some time with his brokers and understand all things commercial, so that we can start looking at opportunities in that space. So I think it's about continuing to leverage the network, look for opportunities, and continually learning. That never stops.
Yeah, definitely. Any questions, Dan? Yeah. First of all, Miguel, geez, well done on pulling the trigger. I just wanted to ask you a question regarding that, because there's a couple of people that do approach us, and I'm sure you get the same, and they're in a corporate job and they're looking for to exit that role. Or can you shed a bit of light on what prompted you, or how did you come to the decision that now is the right time? I know you spoke about the flip and having a couple of cash flowing properties. When would be the best time for someone potentially looking to venture into property full time? What's your thinking criteria? What made you take that decision?
Sure, I think it's a tough one, and I'll give you some trigger points because I think it's different for everybody. So there's never a right time. There are better times and less better times, but there's never a right time. And I must admit, as I was saying my farewells to some of the colleagues, and thanks for. So I left behind a lot of really, really good colleagues. I left behind a network of great colleagues in the bank, and really left there with, having grown with a lot of skills and ways of work, etc. But as I had these one-on-ones with my old colleagues, a lot of colleagues would say, "So jealous of what you're doing, love what you're doing. I will do that when, or I have a set year. When I am 50, 55, 45, I will do that. I will start doing that." And everyone plans to do it. Everyone plans to. The one big difference, I think, and I'm a week out, and you must ask me this question again in 6 months' time, Daniel. But a week out, what I'm expecting is that I'm now working on my terms. I still have to work. I still have to come to the job. I'm sitting in my office right now. This used to be a study. Now it's an office, and I still have to work. But I'm gonna be working on my own terms, on my own problems, as opposed to in corporate I was working on other people's challenges, someone else's problems, and someone else's focuses. I really, really enjoyed my job, but I think it was time to go and focus on my own. So what did I do? What enabled me to be where I was? So I've been building up this skill of being a property investor for quite some time. As I told you, I bought my first property over 20 years ago. And I think I got to a point and I got to realization that I got sufficient skills and sufficient networks and contacts in enough elements of property investment that I can do a variety of things. So I'm no longer reliant on a job to support me financially. And I think it was that realization. So it's great that I've got a portfolio and a balance sheet. Like I said, it helps me to some degree, but it's not because of that I've been able to make the change. But I think I came to that. Like I came to that realization, and it was probably the last flip when I realized that I'd done this last flip. I completed it successfully. It's a project I'm very, very proud of. It's going to make a new homeowner a lovely space for their family. And it's something I did in my part-time and on weekends for 3 months. And I could be doing those, I could be doing 2 of those simultaneously 3 times a year, with the right partners. I think when I realized that, and that financially that would put me in at least the same position, if not a much better position than I am today, I thought, let's go give it a go. Let me take a bet on myself and put the effort in.
Super inspiring,
Yeah, and I think you're right there, Migs. There's never the right time to do anything. When's the right time to get married, to have kids, and to leave your job? So I think it's great what you've done there, Migs, and all the best. Now, obviously, going into the next few years, what's your view on interest rates? Are you worried about interest rates? Where it's going to go?
So Daniel asked me that. So Daniel said, "Is this the right time?" Now, I absolutely picked the time when interest rates were increasing because I thought that would provide the best environment to start investing in property. and by the way, I'm highly leveraged. My strategy is to leverage the bank, so those interest rates hurt me as much as they hurt anybody else. But interest rates. So I did a bit of analysis on interest rates, and it's a pity that I'll have to rebuild that because I did present it internally. It's public information, and I should actually bring it on probably at the next MPC meeting. But so the expectation, let me start with answering the question and give you some background. The expectation on the 28th or 29th of September, that's when the MPC meets again, is if you ask ABSA economists are saying rates are going to increase by 0.75%. It's the same as the last time. FNB and Investec, I think, if you look on their website, they're looking at 0.5% increase. And all 3 banks are looking at the same level of increase again in November. So ABSA is saying 1.5% by the end of the year, FNB and Investec another 1% by the end of the year. So, but I also think things are so volatile at the moment that I think we have to kind of hold on tight. If anything, at least we're increasing. I would say, if you have a full enough outlook, I'd say by middle of next year we could probably be at least 12%. That's just sensible. So we're going to overshoot, I think, the 10% that we were before pre-COVID. I might even say overshoot further than 12, but let's stick it to that. And if you look at the previous 2 shocks in 2008, 2001, now there were very different reasons for those interest rate shocks and increases, but they all followed. Those 2 at least followed the same pattern, where the rates increased. It took about 10, 12 months to get to the highest peak from when they started. And given that we started, was it January this year? I forget now. It took about 10, 12 months to get to the peak. They stayed at the peak for about 6 months, and then it took about 8 months to then go back to where they were. So if we had to overlay that shape onto where we are now, we are going to see an increase into possibly middle of next year. It's going to sit there for the remainder of next year, and then we're going to see rates decrease in 24. And when they decrease, they're going to decrease fairly quickly. So that's the outlook. It's not good. It's really hold on to your seats. Watch your cost. A landlord's biggest cost is their home loan payment, and that's going to increase very, very quickly and can really close any margin you might be making at the moment.
Yeah, definitely, Miguel. So just coming back, Dave, I think it was last year, Dave and I had a bet about where do you think interest rates will be in December 2022. I think I've already lost. Dave, what was I? Was I 8.5 or 9?
I'd have to get it up there. Miguel, while I find this, I'm kind of curious about your opinion on what we're going to see about repossessions and default rates. I'm assuming we're going to see a big spike because a lot of people bought really cheap debts over the COVID period at 7%, 8%. And now if we hit up 12, that's going to be almost a doubling in their payments.
Yeah, 100%. So I think definitely going to see a sharp increase in homeowners in distress. Okay. So and I'm gonna split it between homeowners in distress and then properties in possession or auctions, that kind of thing, right? So banks, the legal system, and especially after what happened in 2008, the legal system doesn't allow banks to move too quickly through that process to auction. Okay, the legal system does really try to ensure that the homeowner is able to be given enough time to try and recover their position and ideally sell the property themselves. The banks equally, and this is all the banks, not just the bank I came from. Banks equally don't want to bring those properties onto their balance sheet. It's actually financially has a massive negative impact on their balance sheet. So what all the banks do through their various programs is through private property, Prop 24. You can see all the repossessions, all the bank distressed properties being put onto those. So they might be 1 month one month behind in payments, maybe 4 or 5 months behind in payments, maybe longer. So it's difficult to tell, but you can but that's where you'll see all the properties in distress.
Yeah.
What we might see is that as we get deeper into as we get into next year, early next year and definitely end of next year. Remember, people don't go into distress as the rates go up. They still try to make a plan. They sell this, they sell that, they cut back on costs, etc. Right? And eventually it catches up with them. So there's almost I guess there's probably a 6 or 12 month lag before you really see those properties come through, and that person and those people really cannot help or hold on and make those payments. So middle of next year we'll definitely see those numbers come through. I think it's about going through. Dave, you often talk about going to a homeowner in distress and putting a solution to their problem to them, right? Andrew, that you talk about that a lot, right? I think that's when the solution is really going to work. It's how, as an investor, how can I take this problem off you and allow you to continue your life without having this massive potential, black dot on your credit bureau going forward. Help you rebuild. Yeah. It's going to be finding those solutions, and I think that as investors, if we think like that, that'll really put us in good stead in the next 18 months.
Yeah, 100%. So leaning into our bets, Nico's the only one in to win it at the moment at 9%. Nico's going to lose that bet real soon. With only one person betting above Nico, and that was Tim Bisa at 10%, but I don't think that we'll be there either at this rate. So I put a bet on at the low 8s. Drew, your bet was at 8.5. we were all very optimistic about how long this would run.
Yeah, exactly.
As you look into the media, and especially look at the American media, right? They are talking about a massive recession. They're looking at rates blowing out. I mean, their rates have doubled. I think I'm not quite sure where they're at, but they've seen some significant increases, more so than we are. And in the UK, it's not just the rates; it's living costs, right? energy costs, etc. Right, there's some massive increases. So I think you probably need someone who understands economics really well to explain how that's going to impact us. But one thing I do know is that our economy relies on foreign investment, and our interest rates that we pay on bonds and that kind of thing needs to be attractive to foreign investors. If local rates in the US, UK, Europe are high, ours needs to be higher to still attract that cash. So I think we guess I'm looking very carefully for when those rates start dropping off, because then we can then start to take some relief from that. Now, our MPC follows inflation, and our rates do follow inflation, but there is a correlation between that and those UK and Europe and USA interest rates. And right now, those interest rates are still going up. So definitely the direction is this. I don't know if it's this or if it's this, but it's definitely there, kind of thing.
Yeah, definitely.
Yeah, I mean, I'm looking at the graph now for the US. It's a steep graph. It's a steep graph. It's gonna be a fun couple of years.
Yeah. So Dave, I think it's going to be time for installment sale agreements, trying to save lots of sellers.
Yeah, let's hope there's some equity in those properties. That's probably the biggest risk for those of you guys who are really into the installment sale agreements. New purchases tend to not have a lot of equity for us to work with, so you're going to have to come up with some real creative solutions to make that money work for you. But the opportunity is going to be there. People are going to need help. There's always going to be the opportunity for you to come in and solve those problems. You just have to have the right tools in your toolbox to make sure you can get involved there.
100%. I think Dave, we get the cost one. Sorry, Mix. Let's maybe jump into, because there's a few questions coming through, which is great. Dan's got a question. There's a question on Facebook. Remember, we've got Miguel Martins, a full-time property investor. If you have any questions for Miguel living in the corporate world, going into property full-time, now's the time to ask. But Dave, let's do a quick recap of the events for the week and then come back, take Dan's question. And if anyone has any questions for Miguel around his multi-let interest rates, please ask it now in the comments box. So what's coming up, Dave?
Sure. So there is a link in the chat box for you guys to see all the upcoming events. At a high level, it's a relatively easy couple of weeks. Andrew is hosting a breakfast up in Joburg on Wednesday morning. So that's 8 o'clock. Just a good opportunity to network, spend some time with each other. That is next to the Shell.
Yeah, next to the Shell.
One inside.
Yeah, those are instructions. I got lost the first time I went there. And Miguel, are you joining us, Wednesday morning?
Definitely. No, looking forward to it. It's going to be, like I said, my life now is about building networks further than what I've got, but also sharing, I think, the experiences I've been through. So really looking forward to networking with other investors.
Definitely. It's Wednesday morning, 7:30 for 8. It's open to any property investors, whether you're a current SAPA member or you knew, it doesn't matter. It's just a chill, laid-back networking event happening in Morningside. If you click on the link, you'll get all the details on that link for Wednesday morning. And then, Dave, I think the next event was the Money Summit,
Money Summit on the 15th. I'll put the information for you guys to get your tickets in the chat box. You just need to go there and use your code. And yeah, pretty stacked day. Lots going to be happening. So make sure you get there early. Make sure you got time to be there. Don't double book yourself. There's always a good opportunity to learn, meet some people networking. And then Andrew, you got the networking event as well in the afternoon, right? So
yeah, that's right. So Sapin will have a stand all day from 9 till 5, and then there's a networking event from 6 to 8. There is no cost. It is a free event for all of you. Like Dave said, there's the Link Money Summit. Just put in the Sapin as an invite code. You won't pay anything for the event. So either come during the day or during the day and in the evening. There are still seats available. So make sure you join Mohammed Gadi, Kali and the team on Thursday, which is next week Thursday, at no cost. And then Dave, you've got an awesome breakfast on the Saturday morning, the 17th,
Yeah, 17th here in Pinelands in Cape Town. Really, again, just like you're doing this week, a really good opportunity for anyone to just pull through, spend some time together, network, meet each other. Unfortunately, our pricing is not as good as the Joburg guys. Apparently, you guys get cheaper breakfast than we do. But yeah, it's going to be a really fun one. Just a good opportunity to meet each other. We've got Darren Francis is confirmed, Christian Harbeck's coming through, one of the other Cape Town coaches, and John Wemmers is going to be our our host. Nothing, not that we have too many speakers, but just some formality. John's going to be there, really introduce you guys. It's going to be fun.
Yeah, awesome. Nice one. So sounds good. Some good networking happening, which is awesome. Yeah, so if you just joined us, ladies and gents, it's Dave, Daniel and Andrew's coffee chat on a Monday. We're joined today by Miguel Martins, a full-time property investor, talking about his journey and leaving the corporate world, getting into property full-time, and what's coming in the next few years. Interest rates are definitely going up. How's that going to affect all of us as investors? And Dan, you had a question on that, didn't you?
Yeah, definitely. Miguel, my question is more tailored towards property investors, first-time home buyers, people that are looking to buy the next couple of properties. With the ever-rising interest rates, it does impact a lot of things. It impacts your cash flow on a monthly basis, how much rent people are charging to try and deal with that issue. But in terms of future proofing, if there are people watching now looking to buy their first property, looking to buy more properties, what are some things you explore to future proof your investment, to make sure that you're not like in financial trouble in the next couple of years because of that one property? Could you give us high level? Do you stress test your deals? How far do you go with stress testing? Can you shed a bit of light on that?
No, great, Daniel. I mean, I think it's something we talk about a lot, right? So it's about running the numbers. So understand really understand what your expected rentals will be on that property, and and just on that, triangulate what you pull off the TPN report with what you see on Prop 24 versus what you see on Gumtree. To have a good look around and make sure that the expected rentals you're getting as you're purchasing that property is what you're going to get, right? And that's just to really give you as much certainty on what that income will look like. TPN is great with the good standing ratio for a suburb. So that a good standing ratio talks to the health of the tenant, but it also has, I believe, a link to the demand in that product. So a higher good standing ratio in an area will mean that if you had to lose your tenant, you will get another tenant fairly quickly. Okay, so since vacancy rate is not or doesn't go down to a detailed level, a detailed area level, you've got to read it from good standing ratio. So pull it from that. The next thing is your costs. Really understand those costs. I spoke about some properties I have that weren't great investments, right? And it's because I didn't appreciate the costs, the utility costs, just the utility costs and some of the maintenance costs that come with managing or looking after a property, fully into the roof, the gardens, etc. So understand the costs. And then in terms of the interest rate, this is the easiest one, is look at your numbers and run if you're buying today, run your numbers at 11%. That'll be my number. We're going to hit well ahead of that, as I said, but that's where we'll come back to, I think, long term. And if you're going to be really careful, do it at 14%. But I think that'll probably decline or come out of a negative view on a lot of your property investments, and maybe that's stretching it too far. But you got to take a view. It definitely can't be at today's interest rates. That'd be silly, right? Because we know we're going back to at least where we were, if not a bit more. So it's running your numbers, understanding what that profit and loss statement looks like for that property, and then so that's finding the property. The second step is becoming a good landlord. A good landlord is about finding good quality tenants, not just who comes through in green when you do a TPN credit score, but also what type of tenants do you want. So finding those type of tenants, being strategic about not chasing a rent price, but chasing a type of tenant as well. Managing that tenant, having a healthy relationship. You're not friends, but you're also not. I think having a supplier type relationship with a tenant is dangerous, because if you treat a tenant very black and white, It's you know you've got to have some warmth. That's why it's a relationship, but it's a professional relationship. And then lastly, taking a long term on it. This is not a what's happening in 2022 and how much cash I'm going to make in 2022. It's about a long term. Property investors are long term investors. The property has to cash flow, but it has to cash flow over a 5 to 10 year period. That's building the normal portfolio kind of build. If you're flipping, it's obviously different numbers, but it always comes down to the numbers. Always. Last comment. You're selling a product. A property investor is selling a product. We're all selling. We're either selling to a tenant or we're selling to a buyer. We're selling a product. So think hard about the product. And when I think about a product, think about a car. How fast does it go? Is it shiny? What does the inside look like? Imagine you're selling a second-hand car. How would you best put that in the market so that someone else comes and buys it for a fair price? So always think about your properties as a product and just get your mind structured around that.
That's good value. Thank you so much. Especially, you're not just chasing the rent, you're chasing the type of tenant, and you're adding so much value that you build a good relationship with the tenant. But Dave, I see there are a couple of questions. A couple of people did ask. Do we want to go through them?
Yeah, 100%. Unfortunately, this person's name's not showing up. If it will load. Okay, fine. I'm just going to read it. Miguel, your multi-lets, how are they structured? Did you have issues with zoning? Is the land use schema for Johannesburg helping?
This is always a tricky one, right? So multi-lets, great way to get several streams of income onto a single cost or a single property, right? And drive yield. The challenge is that if it's not done correctly, if you haven't got approved building plans and the right zoning or consents, the challenge is that, council might have a problem with that, and you might see rates increase and other penalties. And of course, if you come back for refinancing, trying to take equity out of the property, or trying to sell the property, the banks won't accept it because it's not hasn't got the correct zoning, etc. So I'm going to be honest, half my properties I have the approved plans. I have consent on some. I've rezoned one, but part of my project and one of the things I need to do the next 3 months is get the process to get the zoning and consents on the other properties. And these things come into sharp focus, and I think I'm the same as many investors I speak to. We see these great opportunities and these great properties that can be sliced and diced, into cottages. But what I don't appreciate always is that you do need to think about the legal ramifications and how it affects you as a property investor down the line. So for me, it's about reducing risk and the risk of council having a problem with it, and it's also about enabling and releasing the equity that's sitting in those properties, and by creating value. The 20,000 odd rand that's going to cost me to get approved building plans is going to increase my property value by about 10 or 20 times that amount, actually, because I have it. So it's a great return on investment. It's a bit of schlep, but it's got to be done.
Yeah, 100%. And then I think a bit more of a general question from V over here. Miguel, how are you currently sourcing funding for your investments? So what methodology are you using? Obviously, you've got some bank finance that you've worked with historically, but going forward, what's your plan?
Sure. I'm needing to get my financial statements up to date, because now I'm going back to the bank as a self-employed. So a lot of the challenges I had investors who came to me previously with, I'm very much in that boat. So once I've got that up and running, I'm definitely going back and leveraging the income that I'm currently getting off my rentals to get that financing. I'm fortunate that my wife is full-time employed for another bank, so she will lead when it comes to investing, when it comes to us. But if I try to do this by myself, I'm going to have 1, maybe 2 projects a year, and I'm going to grow very slowly. It's actually going to be frustrating. I'm probably going to go back to work. But right, Daniel. So I definitely am already working and starting to create partnerships and just having conversations. I've met partners who are in the corporate space and then some investors as well, who either have financing available because of their affordability or have cash available. And I think in different, and it comes down to a project by project basis, but I will be working with partners to grow the portfolio. And I'm not sure if that's going to be cash partners or cash investors, or if it's going to be equity partners. So really just exploring that and understanding that world. I've been fortunate, I guess, in a way that I've never had to, and now I do, but that's also part of the learning and the experience that I'm going through at the moment. And really enjoying it. It brings a whole new dimension and creates massive opportunity.
New challenges, new opportunities. Dave, I see one more coming there.
Yeah, one more coming in from V. Sorry, I'm trying to fix the issue where it's not displaying the images at the moment. But V's asking, how long does the rezoning process take in to make in Johannesburg over there with the zoning schema you've got? What's the timelines looking like on multi-lets?
I don't know about the zoning, to be absolutely honest. I think it's probably in the region of six to 9 months. Subdivision, I know is I've told is less than 6 months, but a zoning is longer. Thankfully, I'm not in a situation where I'm time bound. I'm not building a development or something. So happy to give it to a town planner and just make sure that it does get done within the time. And once it's in process, then banks are more open. Oh, there we go. Mauritius telling us it's 12 to 18 months. But once it's in process, banks are a lot more open to financing the property, whether it's refinancing or selling or to finance with a sale, because they aren't always entirely comfortable with it, but they're a lot more comfortable with it than if it's not. So, but it is a long, laborious process. That's why you get someone else to come in and do it. So I'm going to get someone else to come and do it so I can focus on building the portfolio.
100%.
Yeah. Awesome, but Dave, I think we've come towards the end, eh?
Yeah, that's all the questions we've got at the moment. Thanks, Miguel.
So, Miguel, what is one thing you'd like to leave our audience this afternoon? One piece of advice or anything that you want to leave them for today?
Sure. I'm going through a lot of thoughts at the moment as I kind of transition right into this new space. I think everyone says, "Wow, you made the big step. You've managed to eventually move from one place to another." So one thing is, for those in a similar situation looking to get out of their day jobs into anything else and in property investing, let's make sure it's pull factors, not push factors. So don't leave because you're unhappy or uninspired. Leave because that next thing inspires you more, and leave because consider that you need to see more of a future in where you're going, as opposed to being pushing yourself away from any kind of situation. So, I think there's a lot of opportunities. I've been fortunate enough to be in this space for quite some time, in this network with Sandton, and it's given me the confidence that me and my family, we will be okay with this next move. Maybe another comment to make, Andrew, Dave, Daniel, is that I'm out of the bank, but I do retain a lot of relationships there. So any of the investors who used to reach out to me, they're more than welcome to. I think my cell number is the same. Obviously, my apps and emails changed. My cell number is the same, and always happy to give advice in terms of financing, banks, etc., and push them in the right direction. So happy to continue doing it. That's part of me being in the network and putting my contribution into the network as well.
Super exciting, Mix. And thank you again for your time. We're going to be seeing you Wednesday morning again. Wednesday morning, I'm sure there'll be quite a few investors coming through asking you questions about your journey and what you're getting yourself into, which is amazing. But we have come towards the end of our coffee chat for today. And as you all know, there's the event Wednesday morning in Morningside. Dave has put all the links in the comments box. Money Summit next week in the Breakfast Cape Town event next Saturday. But Miguel, from myself, thank you very much.
Thank you. Thanks, guys, for having me on. Great to chat to you and look forward to seeing you later this week.
Awesome. Thank you very much. Thanks, Dave.
Cheers.
Thanks, Dan.
Thanks, man.
Cool. Let's go.